Hi, good afternoon. Welcome to the marketplace. Coming up, Ghana ranked among 16 African countries whose operational risk worsened between the end of 2022 and mid-2023. We will discuss the implications. Also ahead, government expected to finalize domestic debt exchange program after securing more than 90% participation in the final round of restructuring of the financial instruments. Plus, constant price hikes force Ghanaians to reduce appetite for food and other essential items, according to a survey by Maverick Research. We'll delve into that ahead. My name is Daryl. Kwawu. Thanks for joining us. Details coming up. First up, Ghana is ranked among 16 African countries whose operational risk worsened between the end of 2022 and mid-2023. That's according to the Economist Intelligence Unit's latest operational risk outlook. Let's hear more in this report.
According to the UK-based firm, the worsening scores have been driven mainly by deterioration in the macroeconomic risk subcategory. This reflects the negative impact of rising domestic consumer prices on businesses' profit margins and the wider implications for exchange rate and monetary policy. That said, despite shocks presented by the Russia-Ukraine war and the scars left by coronavirus pandemic in 2020 and 2021, EIU said macroeconomic risk retains its place as the best rated subcategory across the region with an average score of 43, equivalent to a C rating. This is mainly reflecting relatively fast economic growth that comes with expanding populations. Meanwhile, 11 of the 51 countries have an improving risk outlook. These include Tanzania, the Central African Republic, and Ethiopia.
Government is expected to close a chapter on the domestic debt exchange program in the coming days after securing more than 90% participation in the domestic dollar bonds, cocoa bills, and pension funds. Here's more.
The domestic dollar bonds, the cocoa bills, and the restructuring of the pension funds ended last Friday after it was extended on 2 occasions. But based on what Joy Business has picked up, participation in all these papers is pegged at more than 90%. This government claims it has secured more than what it even targeted to describe this final round of domestic debt exchange program as a success. Finance Ministry, together with other financial institutions that worked on these papers, will be coming out with the fine details in terms of the level of participation, as well as the allotment and how the payments will be done and the maturity dates in the coming days. Government sees the closing of this chapter on the domestic debt exchange program as one of those targets that could help Ghana pass the first review under the IMF program come next month. Some market analysts also believe that finalizing this domestic debt exchange program will give some clarity about the direction of the economy when it comes to government's finances.
Meantime, government says it has made significant progress towards restructuring of its external debt, including Eurobonds. Dr. Mohamed Amin Adam is the Minister of State at the Finance Ministry. He spoke to my colleague, George Afe.
I think we are making good progress on that front as well. We have 2 types of external debts here. You have the Eurobond holders, and then also you have the bilateral creditors. So for the Eurobond holders, we set up 2 committees. The first committee for the international bond holders, and another committee for regional bond holders. We've had constructive engagement with them, and we actually shared in May this year their restructuring scenarios, hoping to receive an offer from them. As I speak to you, we've received an offer from the regional bond holders, and we are negotiating, we are discussing seriously about that offer. We're hoping to receive an offer from the international bond holders. For the bilateral creditors, we are also engaging in constructive discussions with them. It's looking good, and then we hope to reach an understanding and to sign an MOU with them in the next months, and so this is where we are as far as the external debts restructuring are concerned.
Well, back to our earlier story to do with the EIU's operational risk outlook, which says that Ghana is among 16 African countries whose operational risk worsened between the end of 2022 and mid-2023. On Zoom with us, Kwawu, who is Senior Finance Lecturer at the University of Cape Coast School of Business. Thank you for joining us this afternoon. First of all, explain to us the factors considered in assessing operational risks of a country as far as the economy is concerned. Can you hear me, Mr. Kwawu? I think you'd have to unmute.
Okay, all right. Daryl, thank you very much. When we talk about the operational risks affecting the operations of companies in a particular country, generally we are looking at the macroeconomic indicators. We're looking at inflation, the employment level. We're looking at the exchange rate of the country. And when those indicators are not very good, companies in the various countries find it very difficult to operate. And the interest rate might go up. When interest rates are high, companies will have to increase the price of the commodities that they have. And for us in Ghana and some countries in Africa, we have been hit by COVID-19, and COVID-19 coupled with the Russian-Ukraine war came in. And so that has heightened the operational performance of companies that live in Africa and the continent, thereby affecting the prices of commodities that we have in the various markets. But this gives room for businesses to now plan very well and make sure that they strategize to ensure that they are able to maximize the returns that they get on their investments.
Yeah, I was going to ask you why you think our operational risk worsened between the end of 2022 and mid-2023, and you cite instances such as the COVID-19 pandemic. Are these just factors that were external, or there are things that also the government or the managers of the economy didn't do right? And then what are the implications if our operational risks worsened during that period?
Yeah, so when you look at that, we can look at both external factors and internal factors that affect the operations of companies in Ghana in particular. The external ones, as I have mentioned, we are looking at the Russia-Ukraine war. Aside that, we also have the banking sector cleanup. That has also affected. We also have situations where our government was not able to manage the exchange rate very well. Our government was not able, the domestic debt exchange that we also have over a period had affected a lot of companies, a lot of individuals in the country, and that went a long way to affect the Bank of Ghana when they have to increase the policy rates within the country. And so there are some factors that are external to us, but then largely we can look at we not being able to manage the exchange rate system that we have in our country. And then the borrowings of government, the fiscal policies of government was not very good. We have increases in taxation within the period, and these increases have actually affected most of the businesses that are operating.
What should the government be doing now to reduce the risks and mitigate its impact?
Yeah, Daryl, when you look at what we have done so far, we've been able to secure the IMF deal. Securing the IMF deal brings some level of stability. So over the period, we have seen inflation coming down and going up, We have seen the exchange rate stabilization. We've seen some agreements being entered between the government and IMF in terms of zero financing of IMF, the government programs that we have. What we need to do is that we need to prioritize the needs of the country. Once we are able to prioritize the needs of the country, we would be able to do well. But my fear is that once we are entering an election year, and we have seen glimpses of the by-elections that have come in, politicians tend to ignore all the policies and then the benchmarks that they have set out for themselves. And that, I think, we need to go back and look at it and ensure that we follow what we have agreed with IMF and what we have agreed in the budget of the country.
Okay, before you go, I just want to ask you about the DDP, some latest developments. I just want to run them by you. First of all, that the new DDP, the government has secured over 90% participation. It is intending to close a chapter on it. We just had the Minister of State at the Finance Ministry say, well, we are making some progress on external debt restructuring. In that interview, he also indicated that the government may be going back to scout for more investors from the initial DDP. I mean, for those who did not participate, I just want to put all of these in context. How are we doing so far, do you think?
We have kept so long in terms of the external debt agreement that we need to do. We need to fast track that and make sure that we are able to do well. If we are not able to restructure the external debt, then it is going to be very difficult for us. And if the Minister of State at the Finance Ministry, at the Presidency, is telling us that they are coming to call on the domestic bondholders who did not take part in it and to reconsider their decision to roll onto it, that presupposes that they are finding it very difficult with the external debt exchange. And the external debt restructuring, they need to go back and look at it. I'm not too sure that those who have not enrolled on the domestic debt exchange at this time, if they are able to receive their coupons and all those things, and with what the government is doing over a period, government will be able to get them enrolled on it.
Thank you so much for joining us here. I'm Kwawu, Senior Finance Lecturer at the University of Cape Coast School of Business. I appreciate your time with us. You heard him talk about inflation. Well, constant price increases have forced Ghanaians to reduce their appetite for fast-moving consumer goods, according to a survey by Maverick Research. The survey pointed out that consumers offset food price increases with non-essential items such as non-alcoholic beverages. Atumaika is managing principal of Maverick Research. He joins me on Zoom with some more detail. Good afternoon to you. Very interesting insights from the research. Talk to us a bit more about what you discovered from the survey.
Yes, thank you. So what we discovered from the survey is that compared to last year, so the first half of this year, January to June of 2023, compared to the same period 2022, value growth, that means for FMCG products, the price increases have grown by 80%.
Wow.
Meanwhile, volume has grown by 2%. But think about it. What's the cost of milk, or the cost of your average cost of any product that you buy, right? That's gone up by that much. And Ghanaian consumers have not seen increases in prices, in incomes to that level. So what do you have? What are they doing? They are substituting or making trade-offs. And so the trade-offs that we've seen in order to fund food inflation is a reduction in other categories that we consume, so that I wouldn't consume as many or as much carbonated soft drinks, etc. But I would rather use that money to fund the cost in tomato paste and other products. It's equally important to also clarify or mention that what we saw was that even within the foods category, all foods are not the same, right? And so there's needs and wants, right? And so the foods that we need, right, the the essential foods were fairly inelastic, right? So the price increases, consumers still tolerated the price increases for the most part. For foods that are optional, so what do I mean by optional foods, or foods that are good to have? I'm talking things like cheeses, margarine, butter, etc. We saw that consumers really cut back on volumes as quickly as prices went up, right? So that is what we're seeing, that Ghanaian consumer is stretched as it comes to his disposable income, and they are making those trade-offs based off of their economic situation and their needs at this point in time.
So what are the repercussions of this for manufacturers, for instance, for the non-essential items like you mentioned, the cheeses, margarine, because they're not having it easy as well. They're forced to increase prices because they also want to stay profitable.
Yes. So, and this happens when you go through these economic recessionary periods, quote unquote, if you look at it that way. For manufacturers, there are three key things that you need to understand. If you're a manufacturer in that space and within the FMCG space, you need to understand where your product sits in as far as consumers' needs and wants are concerned, right? So, is it something that do you sit in are you a need or are you a want? Now, if you're in need or want, there are various strategies that you can deploy to better manage the new consumer reality or customer reality. Now, if you play the category where you are you're highly substitutable, right, and so that meaning there are other options in the marketplace at different price points, the quality are comparable or non-distinguishable, then you will be in a more high-risk scenario, right? Because if I have 5 cedis to spend or 10 cedis to spend, and you've increased your price above what I can afford, and there are equally good options for me, I'll switch out of your category. I'll switch out of your brand to buy those. Now, if you understand that, you then look at ways to mitigate that, either through your pack and your price points and the sizes that you offer. Are you going to reduce product in order to hit certain price points in order to keep your customers in? If the other option too, which manufacturers can do, is obviously look at their brands and their portfolio, right? So are you at the various price points, or do you have a sachet, do you have a mid-pack, do you have a large pack, which would then offer different affordable entry points and use cases for consumers. Now, see, when I talk about this, I always want to talk about the fact that Ghanaians are not are not always seeking the cheapest option. They're looking for value, right? And so in certain consumer categories, you have the larger packs that are actually driving. So for instance, last year, tomato paste, for instance, the 2.2 kilogram packs really drove a lot of volume because most were looking for huge value, looking for real value, right? So it's slightly expensive, but I get more. So manufacturers need to understand the dynamic and how consumers actually are working and using the range of products that they have, the range of sizes and prices that they have in their portfolio. The last way that they can look at it is what we call watching the flanks, right? So in most cases, as we see now, you have the sachet end of the product range, and you have the real big container bucket type options. Like real example is laundry powder. So you have sachet options, and you have the bucket options, and then you have your mid tier range, so the 500 kg, etc. Manufacturers need to look at which of these tiers are growing, and then really within their portfolio and really play it up there. If you are if you're playing to a price-sensitive consumer or customer base, you would see that your sachet would have gotten more traction. And so you need to kind of focus on that and drive that bit either through your channel expansion, production, etc. On that front. If your consumers are value customers that still can afford those higher price points, you need to play up to that. So understanding that range and understanding the dynamics of how your consumers are interacting with your brand, your SKUs, your different price points, better positions you to do that. And so for those in the want sector, be it margarine, butter, etc., there's still hope. And manufacturers just need to understand how those consumers are interacting with their products through data.
Well, final question. I mean, it's great that you clarify that Ghanaians are not necessarily looking for cheaper brands, but are looking for value. But my question is that, is it also the case that less popular brands are expanding their market because their products are cheaper?
Absolutely. And I think we've seen that in a number of categories where we call them the no-name brands. But the key thing is that the Ghanaians are not, in terms of our consumer behavior, we're not monolithic, right? So you would have those that would be purely price-driven, and if you play in that category, as a manufacturer, as a brand owner, you need to be conscious of that there are certain price points that you don't cross, and if you play in that category and you're a big brand and you continue to increase prices, the market is always right. So consumers will always retreat until you make the necessary adjustment to that. But yes, we are seeing disruptions in the categories that we cover in terms of upstart brands or challenger brands really, really making headway.
All right, great insights there. Thank you so much, Atumaika, Managing Principal, Maverick Research. I appreciate your time. Let's turn to the financial markets. Government recorded 5.63% oversubscription of Treasury bill sale, but at surging interest rates. According to the auction by the Bank of Ghana, the government got 3.22 billion cedis. Head of trading at Republic Securities, Patrick Edemagama, joins me on Zoom to discuss this. So, Patrick, 5.63% oversubscription at the auction, but at surging interest rates. What transpired during last Friday's auction?
During the auction, we saw that the government was able to raise enough to cater for the maturing securities of 2.68 billion. They raised a total of 3.2 billion against a target of 3.053 billion. We noticed that all the 91 days were accepted. However, they rejected 15 million of the 182-day and then 4 million of the 364-day bill because of the high yields that were quoted by investors. Again, the 91-day was the most desired. It rose by 31.58 basis points to close at 27.02%. The 182-day cleared at 28.26%, rising by 73.67 basis points, whilst the 364-day cleared at 31.24%, rising by 15.76 basis points.
Okay, and so we know that government wants to borrow a whopping 38.959 billion cedis via T-bills in Q3. Would they be able to get that much at the end of the third quarter? We are just a month shy.
Well, statistically, what we are seeing is that the shortfalls that they've seen in meeting the targets can be covered by the oversubscriptions that we are seeing in some weeks. So yes, they should be able to meet that target. What we are all concerned about is how they are going to be able to raise the money to be able to pay the upcoming maturities and the upcoming DDP coupons in February.
Yeah, it's interesting. The Minister of State at the Finance Ministry, Dr. Mohammed Amin Adam, was last Thursday asked if government was going to consider T-bills and a DDP. He said that is not an option right now. But generally in the markets, are there still such fears?
Oh, yes, there are such fears in the market, but so far so good. We've seen that they've been able to meet all the maturities that are coming in. For this week in particular, we have about 2.7 billion that they need to meet, and we've seen that the government is targeting raising 3.64 billion Ghana cedis to be able to meet this short-term maturity. So we expect the trend to continue.
Okay, quick 10. Let's to the stock market. Tell us how the market fared last week.
Well, for last week, we saw some hikes in some of the equities. We expect those equities like Societe gaining a lot of traction last week to continue this week. As we are speaking, it has already gained a peswa and is trading at 1 CD. We expect demand in GCB to also mount for this week. On the supply side, we expect the pressure to be felt in stocks like Goil and Car. As we are speaking, Goil has lost 2 pesos and then Car has lost a peswa. So we expect this trend to continue in these stocks for this week.
And what's happening with Standard Chartered Bank? Because analysts expect share price to rise this week.
Demand for SCB is also mounting against limited supply. The supply levels we are seeing are above market. So when the demand is able to pick that supply, we expect the share price to rise in the course of the week.
All right. Thank you so much, Patrick Edem Agama, Head of Trading at Republic Securities, bringing us up to speed on the financial markets. And that's our program this afternoon, everyone. Thanks for watching. There is more news on our website, myjoyonline.com/business. You can get the day's latest stories from over there. We will be back same time tomorrow. Stay tuned.